Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of the Global Market Outlook. So, if we look at Nifty right here, this is the weekly chart that we are looking at Nifty. We can clearly see that the support of 16,400 has still not been taken out, but this candle definitely looks promising. Maybe next week we might see a close above 16,400, and if that does happen, then the market can move up to 16,800 levels, which is the next strong resistance. A move above 16,800, then I think the market will go and test up till 17,800, which is basically the top of this channel, and then it might come down again to the bottom of this channel. So still now the trajectory is on the negative side only. If we get a close above this level, then definitely things will change. But I think next week we might see the market go between 16,400 and 16,800. If this level is not taken out, then again we can see probably 16,000 levels back in the market. So that's the view on Nifty. Let's take a quick look at certain global markets and other indicators which can decide the direction of Nifty. So starting with the US Brent crude oil. This is definitely not a positive sign. We can clearly see that we are seeing a short breakout here on the weekly chart above 115 levels. So the crude oil prices have reached 119 levels. If it breaks out above 120 as well, then we can possibly see crude oil go back to 140 levels. This is not going to be good for the market, and it will definitely put some downward pressure on Nifty. Plus, it will also put downward pressure on our USD INR rate, because we'll be paying more for oil in dollar terms, and that will lead to the value of the rupee depreciating quite quickly. If we look at the other Asian markets, then we can see the Turkish market is still consolidating here in this level. If we look at the Taiwan market, that is also had a decent pullback over the last 2 weeks, but still below this major support level of 16,400. If we look at the Japanese market, this is also in a downward channel since a couple of months now, but it's again consolidating for the last 5 weeks on this pretty much the same range itself. But again, a negative outlook for definitely for Japan as well. If you look at the Hong Kong market, this has given a pretty decent pullback over the last 2 weeks. We can maybe see the Hong Kong market go up till 2200 levels, but it's trading at rock bottom levels right now. So there is very little bullishness in this Chinese market overall. If you look at the German indices, the European indices, then the German market had a very nice strong up move last week. If we can see a closing above this level of 14,400, then we can probably see the German market test 15,000 levels. So if it gives a closing above this previous support line, then we can possibly see the German market turn bullish and go up till 16,000 levels as well. So let's see, the German market looks like it might go up next week, or it might take resistance here and then start falling down. UK market is definitely looking the strongest out of everyone. It is consolidating at its all-time high levels right now. It's not been able to take out its previous COVID high, the pre-COVID high of Jan 2020. It's still sort of consolidating in and around that. So it's a good sign. It's not falling much, but it's not moving up also. It's pretty stable, consolidating for the last 3-4 weeks at the same level. French market also saw a good pullback. So same scenario here. All the markets had a good pullback over the last 2-3 weeks. Now it's very important that the markets or the indices cross certain important levels, right? To confirm some bullishness. So for the French market, that level would be 6,700. For the UK market, it has to be obviously this level from where it's taken resistance before, right here, which is about 7,600 levels. And for the German market, as I just pointed out, it has to be 14,450 levels. So even though the markets have given pullback, they are not crossing certain important resistance levels which would trigger some sort of a large short covering in the market. So now that is really happening. All the pullbacks that we are seeing are very short term. we're not seeing a nice long-term pullback that's in the market right now. So let's see what we have in store. If we look at the US market also, then the US market also had a very strong pullback. The S&P 500 moved up by 6.5% last week, but again it did not cross the previous support level, so it needs to cross this important level of 4168 to see some sort of stronger short covering in the market. If we look at the Dow Jones, then this has also had a very strong pullback, and as you can clearly see, right, see, if we look at the daily chart, we can clearly see that this on the weekly chart we can clearly see that this was a strong support level that Dow Jones broke. And then when the pullback started, the moment Dow Jones crossed this level, that pullback became much stronger, because after it crossed this level of 32,440, we saw a strong short covering in the market, which took it to the previous support level, or the next resistance level of 33,246. Now if this is also taken out, then this pullback will continue, because over here also people will start coming and covering their short positions here, and the market will continue to move. So this is clearly evident in the daily chart. The moment the market opened here and crossed this level and sustained above this level, if we look at a more shorter time frame, let's look at the 15-minute time frame right here. So we can clearly see that the market made a nice big move here on 26th May. Just move back the daily chart. So this is 26th May, and if we look at the 15-minute chart here, we can clearly see that the market opened here, moved up, and then we saw a steady rise up to these levels, and then it consolidated right here, and then the short covering kicked in, which took it even higher than previously. So that's how basically short covering works, right? If traders notice that, okay, the market has started sustaining above this important resistance level, so they will start booking their profits and covering their shorts, which propels the market even higher. So switching back to the weekly chart, if Dow Jones crosses this level of 33,262, we can see a stronger up move later in the coming few weeks. If you look at Nasdaq obviously still the weakest of all stocks. Nasdaq corrected by close to 30% already. So a strong pullback here as well, but it still did not cross this previous support zone, which is now going to be the resistance for the index going forward. So it still needs to give a closing above 13,000. If it gives a close above 13,000, then definitely we can see a stronger recovery coming in Nasdaq later on. US VIX has also fallen down to 25 levels. That's also a very good sign that volatility is going down. So definitely a positive sign for the market. If you look at the Canadian market, then the Canadian market has broke down from this previous trend line right here, and for 3 weeks we saw a sharp sell-off. And very similar to other markets, we saw a pullback coming in last week. Still, it needs to give a closing above 20,900 for a stronger recovery in the market, so that there is more short covering that can happen above this levels. If you look at the US dollar compared to the 6 major currencies, then we can see that the US dollar has been correcting for the last 2 weeks. So if the US dollar continues to stay in this level or continues further down, then that is extremely positive for all the markets across the globe. But if we see the US dollar again start moving up again, so that will have a negative impact on our markets. If we look at the USD INR, then we can clearly see that the rupee is continuing to get weaker much more strongly compared to other charts, right? If we look at the US dollar index compared to the 6 or 7 major currencies, we can see a sharp correction over the last 2 weeks in that index, but USD INR is not seeing that sharp of a correction. In fact, we saw a very small correction here of just 0.28%. So the Indian rupee is definitely under more pressure compared to other currencies. Now let's take a quick look at certain sectors which can help Nifty in the rally, where you should put your focus on. So if you look at BANKNIFTY is looking the strongest of all. It moved up by 4% last week, so definitely keep banks in your watch list. If you look at the Nifty PSE index, then this corrected last week, so this is looking weaker. If we look at the IT index continues to stay weak, but we saw a doji candle formed here in the last week, so maybe we can see some short-term rally in the IT index in the next 1 or 2 weeks. So maybe there might be some good swing opportunities for in IT stocks. Consumption had a okay week, largely just consolidated in the same range. FMCG stocks are looking pretty strong. If we see a breakout above this level in the FMCG index, then definitely you should have a view to take a swing trade in certain FMCG stocks like Hindustan Unilever, Nestle, Marico, etc. Those charts are looking pretty strong. The energy index is also corrected last week by 3.5%, but it's still above this previous resistance level of 25,316. So if this is taken out, then we can see energy companies, their prices might go down by say 10 or 12% if this index breaks the 25,200 level. Finance, all finance stocks, as I said, Bank Nifty is looking very strong. So financial service stocks are looking definitely strong. Infra has also looking okay, not that strong, not that weak, also largely the same. Nifty Private Bank looking strong. Nifty Auto is looking really strong. So there is something definitely happening in auto stocks. So keep a view on two-wheeler stocks and auto ancillary companies. I think that's where we will see some good bullish swings playing out in the next couple of weeks. If you look at PSU banks are not as strong as the private sector banks right now, even though they did move up, even though the index did move up by 1.28%. Nifty Bank and Nifty Private Bank have moved up much stronger. So keep your view more on the private banking side. I think there might be a good pullback in those stocks for the next 2-3 weeks. Pharma index is looking weak. Media index is looking super weak. And the real estate index is also looking weak. Oh, sorry. The metal index. This was the metal index, not media. The metal index is also looking weak, but it did not break this previous support line that I've drawn here. So maybe metal stocks might see a short pullback to this level of 5,800. So there can be maybe some bullish swing you might get next week in metal stocks. And if you look at media stocks, then media stocks are also looking weak. Nothing great happening there. If you look at Bitcoin, so Bitcoin is also trading right now at its bottommost levels of the last 2 years. So cryptocurrencies are also not having a great time right now. So to summarize, what I feel is going to happen is that if if the US, if the crude oil prices go up, and if our INR continues to depreciate, then I don't think we will see Nifty crossing 16,400 this week. But if the crude oil prices come down back to 112, 113 levels, and we see a further strengthening of the INR compared to USD, then we can see a move above 16,400, 16,800. So I would carefully watch the USD INR rate and the US dollar the crude oil rate. If those two things move up, then I believe a move above 16,400 is unlikely. And if those two things move down, then a move above 16,400 is more likely. So keep a watch on those two metrics for the next week. And then you can plan whether you want to trade on the short side or on the bullish side at that time. So thank you for watching this video and have a good day.